Unpacking TQQQ, a beginner's guide to leveraged ETFs. Imagine you could potentially triple the daily returns of the tech-heavy NASDAQ 100 index. Sounds amazing, right? That's the allure of TQQQ, a leveraged exchange-traded fund or ETF, designed to do just that. But before you jump in, it's crucial to understand both the potential rewards and the inherent risks. Leveraged ETFs like TQQQ are complex instruments, and they're not for everyone, especially not for beginners. Think of an ETF like a basket of stocks. When you buy an ETF, you're buying a small piece of all the companies in that basket. TQQQ is a special kind of ETF called a leveraged ETF. This means it uses borrowed money to try to amplify the returns of the NASDAQ 100 index. Now, the NASDAQ 100 is an index that tracks 100 of the largest non-financial companies listed on the NASDAQ stock market. These are often tech giants like Apple, Microsoft, and Amazon. So when these companies do well, the NASDAQ 100 tends to rise. TQQQ takes this a step further. It aims to deliver 3 times the daily return of the NASDAQ 100. This means if the NASDAQ 100 goes up by 1% in a day, TQQQ should ideally go up by 3%. Sounds great, but remember, it works both ways. TQQQ and the NASDAQ 100, a powerful connection. TQQQ's performance is intricately linked to the NASDAQ 100 index. This index, composed of 100 leading technology and growth companies, is known for its innovation and potential for high returns. However, it's also known for its volatility. When you invest in TQQQ, you're essentially placing a leveraged bet on the future performance of these tech giants. If the NASDAQ 100 rises, TQQQ's value is designed to multiply those gains, potentially offering significant profits. But here's the catch. If the NASDAQ 100 falls, TQQQ's losses are also amplified. This magnification of both gains and losses is the defining characteristic of leveraged ETFs, and it's crucial to understand before investing. Remember, TQQQ's leverage resets daily. This means that each day it aims to achieve 3 times the daily return of the NASDAQ 100, regardless of the previous day's performance. How TQQQ triples the returns and risks. TQQQ uses a technique called financial derivatives, specifically futures contracts, to achieve its 3 times leverage. These contracts allow TQQQ to control a large position in the NASDAQ 100 with a smaller amount of capital. Think of it like this. Imagine you believe the price of apples will go up. Instead of buying a whole orchard, you enter into a contract that gives you the right to buy apples at a certain price in the future. If the price of apples goes up, you make a profit by buying at the lower agreed-upon price and selling at the higher market price. TQQQ does something similar with NASDAQ 100 futures. This allows it to amplify returns, but it also amplifies risks. If the NASDAQ 100 doesn't move in the predicted direction, the losses can be magnified. The upsides of TQQQ riding the tech wave. The most obvious advantage of TQQQ is its potential for outsized returns. If you're bullish on the long-term prospects of the tech sector and believe the NASDAQ 100 will continue its upward trajectory, TQQQ offers a way to potentially supercharge your gains. For experienced traders, TQQQ can be a powerful tool for short-term speculation. Its leveraged nature allows for potentially significant profits from even small daily movements in the NASDAQ 100. However, it's crucial to remember that this potential for high rewards comes with equally high risks. TQQQ is not a buy-and-hold investment for the faint of heart. It requires careful monitoring, a solid understanding of market dynamics, and a high-risk tolerance. The downsides of TQQQ: volatility and decay. The most significant drawback of TQQQ is its volatility. Leveraged ETFs like TQQQ are designed to amplify daily moves, which means they experience much larger price swings than the underlying index. This can be nerve-wracking for even the most seasoned investors. Another important concept to understand is volatility decay. Because TQQQ resets its leverage daily, it can lose value over time if the market is choppy or experiences frequent reversals, even if the NASDAQ 100 ends up flat or slightly positive over the long term. Imagine a seesaw going up and down. Even if it ends up in roughly the same place, all that movement takes its toll. Similarly, TQQQ's daily resetting can erode its value over time in volatile markets. a hypothetical example. Let's say you invest $10,000 in TQQQ. On day 1, the Nasdaq 100 goes up by 2%. Ideally, TQQQ should go up by 6%, which is 3 times 2%. Your investment is now worth $10,600. On day 2, the Nasdaq 100 goes down by 2%. TQQQ, with its 3 times leverage, should go down by 6%. Your investment is now worth $9,964, a loss of $636 from the previous day. This example illustrates how quickly gains and losses can be magnified with TQQQ. While it can lead to significant profits in a bull market, it can also result in substantial losses in a downturn or even in a sideways market. TQQQ and U, a long-term perspective. TQQQ is not designed for long-term holding. Its daily resetting mechanism and the effects of volatility decay make it unsuitable for buy-and-hold investors. Its true potential lies in its ability to capitalize on short-term market movements. Holding TQQQ for extended periods exposes your investment to compounded volatility and decay, increasing the likelihood of losses, especially in volatile or sideways markets. Remember, the longer you hold TQQQ, the more pronounced the effects of compounding and decay become. This is why it's crucial to have a clear investment strategy and a well-defined exit plan before investing in leveraged ETFs. The power of compounding. Why time matters for TQQQ. While TQQQ is not ideal for long-term holding, the power of compounding plays a significant role in its potential returns and risks. Compounding, often referred to as the eighth wonder of the world, is the concept of earning returns on your returns. In the context of TQQQ, compounding means that each day, your potential gains or losses are calculated on the new adjusted value of your investment. This can work in your favor during a bull market, as gains are amplified daily. However, the reverse is also true. During a downturn, losses are also compounded daily, potentially eroding your capital at an alarming rate. This is why it's crucial to understand that time is a double-edged sword when it comes to leveraged ETFs. Diversification is key. Don't put all your eggs in one basket. One of the fundamental rules of investing is diversification, which means spreading your money across different asset classes to reduce risk. This is especially important when dealing with volatile investments like TQQQ. Putting all your money in TQQQ is like putting all your eggs in one very fragile basket. If the Nasdaq 100 experiences a downturn, your entire portfolio could suffer significant losses. A more prudent approach is to allocate a small portion of your portfolio to TQQQ, if you choose to invest in it at all, and diversify the rest across other asset classes like bonds, real estate, and less volatile stocks. TQQQ for beginners. A word of caution. TQQQ is not suitable for beginner investors. Its leveraged nature, volatility, and the complexities of daily resetting and decay require a deep understanding of market dynamics and risk management strategies. Before even considering investing in TQQQ, beginners should focus on building a solid foundation of financial knowledge. This includes understanding different asset classes, diversification, risk tolerance, and long-term investment strategies. Jumping into leveraged ETFs without this foundational knowledge is like learning to swim in the deep end without floaties. It's risky and could lead to significant financial setbacks. Proceed with caution, seek expert advice. TQQQ can be an attractive investment for experienced traders seeking to capitalize on short-term movements in the tech-heavy Nasdaq 100 index. Its potential for amplified returns is enticing, but it's crucial to remember that these potential rewards come with equally amplified risks. Volatility, decay, and the complexities of leverage make TQQQ unsuitable for long-term holding, and especially risky for beginners. Before investing, it's essential to conduct thorough research, understand the risks involved, and consider seeking advice from a qualified financial advisor. Remember, investing is a marathon, not a sprint. Building a secure financial future requires patience, discipline, and a well-diversified portfolio that aligns with your risk tolerance. Please like and subscribe.